Welcome back to another Calgary Real Estate Market Update with us here at Redline Real Estate Group on Redline TV. Today I'm going to be answering that age-old question. How is the market? Based on our stats, our data, and my own little analysis for you today from the month of July. Now, as I do each month, I'm going to be covering three major topics: the sales summary, the inventory story, and then our pricing picture. And then I'll go into a series of advice segments for buyers, sellers, and investors alike. So make sure, stay to the end. Okay, let's get right at it, shall we? Let's get going on the sales summary. So if you've been watching our updates while we've been going through this pandemic, so much has changed. But the story went a little like this. April, well, we basically came to a dead halt. Not unexpected. May, started off slow. The back half of May started to pick up and we gained momentum. Now in June, our momentum carried over for the whole month of June, and our June's month matched last year's June as well. So it's safe to say we had caught right back up. But now, with all the continued uncertainty, a lot of us as parents, we're starting to prep ourselves for the September months and our kids going back to school. There's a discussion about a second wave and what might that do to our economy and further shutdowns. So what did July provide us in terms of our real estate? So the question I had rolling into the month was there enough continued momentum to carry through from what we had was a good June and get us through July with some continued strength? That's the question I'm going to answer. And as I dove into the numbers, I'm happy to report that yes, there was. July as a whole surpassed the July from 2019 by a whopping 12%. So not only did our momentum continue, it actually gained speed through the month of July. And it's in this month that we typically start to see things start to decline. Last year, our peak sales month was May. June was very similar. This year I expected it to be June, and now July has outgrown it. So not normal, but not unexpected with the delay that the pandemic caused. So it's fair to say that Calgarians, the greater Calgarians, are still in need of homes. They want to buy homes, and many are still very capable of purchasing homes, despite everything that's affected us. This is all really good news. What I've personally learned by going extra deep these last 3 or 4 months into the market data to give you the best and most up-to-date info and to educate our Redline agents with the most up-to-date micro trends, I've realized that I'm going to go deeper. The detached market, the semi-detached, rows and apartments, they're all acting so differently. So giving you this general update is great. But I'm going to be, in the months to come, rolling out extra specific data based on those 4 segments. So hopefully, based on your custom situation and your own specific home type, you'll be able to benefit from this information coming. So stay tuned. Along with that, there's way too much info to cover on a market update. I would be putting you to sleep. If you're interested to see the details and the extra bit of information, please, as a comment, put in that you're interested and send us a message so that we can get you onto our specific market update list. Okay, well, with this graph that I'm going to pull up, I'm going to show you the roller coaster month that was. This graph shows on a weekly basis how our sales went this year versus last year. If you're above zero on this graph, above the zero line, that means we outsold last year. If we're below, that means we were behind the pace. So by looking at the graph, you'll see we rode high coming right out of June. Then we dipped, and then we dipped again. And then you can see the back half of July, we continued to gain momentum and outpaced last year's numbers. Now during that period, with a few of those blips, we had something really cool happen. What happened is our real estate board combined with 8 other associations around Alberta, amalgamating all of our data and pulling all of our listing and property and sold information into one specific resource. Now that's fantastic for us all, and so that we can help you beyond our own local borders. But what it did is it caused a bit of a mess with the data migration. Such a mess that it did delay people's ability to go ahead and purchase. So that's where we saw a dip, and it took a little bit for us to rebound to the numbers that we were seeing at the back half of July. Those numbers are indicative of what probably would have continued should our real estate board's migration have gone smoother. So the question for me is, will this momentum now carry over from June through July into August, where we sit right now? Now we don't know this for sure, and time will tell us. But I did want to pull up another graph. This is our showings. This shows how our showing activity is currently going, and then it comparing to last year. So let me whip this graph up so you can see this right here. What you will notice as I take this graph and I bring you into a smaller cutout of it, there is a very large gap from our current top line to last year's line below. That is the growth in showing activity that is happening right now while we go through August. So if we're trying to predict the future and trying to suggest, will the momentum carry to August, this is as good of indication as any. Our showing volume is through the roof right now, which will translate to a very strong August, which is unseasonal, as we are usually already cascading down in our sales volume towards the fall months. So among all of this, I do remain optimistic. Okay, let's talk now about our inventory story. During the beginning parts of July, we continued our trend from June, which was a rush of new listings coming to market. June saw an increase across all of the property types in relation to its new listings versus last year at the same point. And July showed much the same. Let me pull up the graph here and you can see how we trended this. So just like the other graph, above zero means we were listing more properties than we were at this same time last year. As you see by the graph, the first, say 20, 21 days of the month, we were substantially higher. We were putting more new listings to market than the same period last year. Then you'll see on the back third of the month, the listings dropped below zero, indicating that we were slowing the pace of new listings, which is a good news. This is something I was hoping to see maybe a little bit earlier in the month. If things had continued at that first pace, that front end, for too long, we'd run the risk of changing from a healthy market to something where the pendulum was going to swing the other way, and we could be affected by price declines. As you can see by this graph, it shows our gradual increase in overall inventory. This lines up with that heavy amount of new listings that came to market at the beginning of July. But then it started to curb off and flatline. That's what I wanted to see. Now, when I pull up this third graph relating to inventory, you'll see that at the beginning of the month, again, we were 15% below last year's total inventory. Pretty healthy buffer. But by the end of the month, we went all the way to almost 10%. We ended up with 11% less inventory than last year. If we want to maintain our pricing and not see future declines, we want as big of a buffer from last year's numbers as possible. Some might say, hey, with less new inventory, Darren, that's not a great thing. Buyers won't have a good amount of choice. That's simply not the case. We have plenty on the market to find a great fit home for every price point and every property type all around the city. Okay, so after all this, let's quickly talk about the pricing picture. So the first thing I talked about was sales. Sales increased July over July by 12%. Check. The second thing, inventory. It's less than last year by 11%. Another positive, another check mark. So what did all of that do in regards to our pricing? I like to talk about pricing in two ways, year over year, as well as month to month. Right now, as a whole, year over year, our pricing has adjusted down by minus 1.2%. That's the total market, all summarized together. But month to month, we've actually seen a small growth by about 0.6%. As I mentioned before, Every market segment is acting differently. It ranges in a big way from the best performing market, which is the detached homes, all the way to the worst performing market, which is the apartment segment. Again, if you want to know specific information about your property or the property that you're looking for, please leave a comment so I can get you this info. If things continue and our sales momentum maintains itself, or even starts to naturally seasonally adjust a little bit downward, and our inventory can stay in around that amount, we could expect that again, month to month, we won't see any major changes. And very likely with this scenario, this full supply and demand equation, we will likely stay very flat once again through the month of August. Well, there we have it. Those are the 3 detailed points of analysis to do with this update. Now I'm going to transition right over to my advice segment. Okay, my advice for buyers. Okay, if you're a buyer out there and you've yet to purchase, or you're a new buyer that's just jumped into the market, what you wouldn't expect that throughout this pandemic, the slowdown into the summer chill and vacation time, and the uncertainty to our economic situation, that you'd be entering or that you were in a market that was feeling quite fast-paced. But I'm here to tell you, and I'm going to prove it to you, that the market is acting much faster than most of us expected. And especially if you're just getting in, I want you to know that so you can plan and understand your expectation level. Okay, let's pull up another graph. This is a graph that I built this month that speaks to the real-time micro trends. This little bit of data you're not going to get anywhere else, but it does speak to the real story happening right now. So when a market is healthy, the number of sales in relation to the number of new listings, that ratio is high. If most of the properties that come to market get sold in a short order, that means the market is healthy. This is exactly where we are right now. So looking at this graph, it's based on a ratio, right? Our peak, our hotness through June, you saw that number, that ratio, get up into the 70% range. Then it dipped a little bit. That's thanks to that tech migration we had. But now it's jumped right back up. So here we are as I stand in August and releasing this video to you. Speaking about July, we are seeing that sales to listing ratio maintains a very, very healthy ratio, which means it will fill fast for you. A well-priced home will sell fast, and it will sell close to list price. So as a buyer, my advice to you is to understand that, even though it is contrary to everything that's going on in our full life situation right now. Now, I also wanted to let you know that this graph that I showed, this isn't just one day versus another day. It's not just me sharing that, hey, we are still selling really well on one given day versus another. No, this data is much more important. Every dot on this graph represents a full week and their average. So it is pulling together a real trend for you so that you can see that as we're selling 350 to 450 homes per week and listing 80 to 90 homes per day, this is all pulled together, and this is a real life absorption rate trend graph that should tell you that this is the reality of our current situation. So if you're a buyer, it's pretty simple. Just be ready to go. Be ready to go and understand the current pace that's happening right now. Sellers are getting the message, realtors are getting the message about pricing properly under the scenario that we've just come out of. When that happens, it's listed and it's gone. Okay, now my advice for the sellers out there. Let me pull back that graph up that I just shared in my buyer's advice segment. This graph right here should give you a lot of confidence and give you some optimism that you're going to be able to achieve what you want by listing your home on the market. Now, I also pulled another set of information. Now I'm going to whip up this other graph right here for you. This graph takes all of the sales that happened in our region in the last 30 days. And then I broke it down into, did it sell in the first 0 to 10 days, 11 to 20, 21 to 30, all the way up to 50 plus. I wanted to trend that against the average sales to list price ratio. Basically trying to prove with current information if pricing well provides you an advantage. Okay, so what did you notice by looking at this graph? On the far left is the early days on market, 0 to 10 days, 11 to 20. The graph shows higher there. That means a higher sales to list price ratio. So the best prices are being achieved by the homes that sell first. You might have heard this from agents, or you might have known that this exists, but weren't sure if that really applied to today. But this graph paints that picture for you. If you're gonna sell in the first 0 to 10 days, be that first person to move their property, sellers today are achieving about an average of 98.5%. That's pretty darn good. Then as the 10 days go on, you're seeing the graph adjust by about 1%. 1% based on our average sale price is about $4,500 less in your pocket every 10 days as you go for the next 10-day cycle. So take this maybe unexpected bit of news that the market is strong. Price your property well and go after it, because as I've just shown, people are achieving great success right now. Don't take this advice. Put your house up and put it as an aspirational price. You'll do which the other 50% of the market is doing, is sitting there and waiting and turning into a bit of frustration. What we don't want you to do as a seller on the market is be a resident of Frustrationville. Nobody wants to be there. Okay, my advice for investors. Using this graph that I put up for my seller's advice, I want you to know this. I want you to really dig deep and understand this, because math matters to the investor, to the astute one. When new properties come to market and you're waiting for something to match your search criteria, whether you're an investor for cash flow or for flipping, it doesn't really matter. You want to know exactly the expectations that you should be having based on the market. Let me pull up another graph about this as well. It's a further breakdown of that first graph for you, our investors. In this graph, you'll see the following. 10% of the homes are selling in the first 10 days. 25% of the homes are selling in that 11 to 20 day mark. And then another 15% are selling in the 20 to 30 day band. So what does that mean? 50% of the homes today are selling in 30 days or less. Do you think that market segment is where you would be deal hunting? My guess is no. So know what's happening. Now, if the right fit home matches and you want to go after it, just know, just like everybody else, you're going to have to fight, because that list price to sale price ratio is significantly higher in those first 30 days than if you're patient and you wait for things that have been sitting on the market for a while. When I look at this circle, 1/3 of the properties selling are selling at 50 days on market or longer. If I were you, that's where I would pinpoint my targets. Because after 50 days on market, that's where the sale price to list price ratio drops significantly. And we're under, on average, 96%. And you and I know we can even do better than that. Well, there we have it. That's everything. Again, if you made it this far and you've listened through all of this, thank you. I appreciate your attention. I hope if you did, you've learned something new about our market and you're excited to learn what happens in August. Again, if you haven't yet liked this video, please do so. We get a lot of love from that. Please subscribe so we don't miss, and you don't miss any of the videos we release. And otherwise, I look forward to chatting with you next month.